All right, guys, back to work. Back to work. Fantastic day today. Hope you guys made some money in those beautiful two-legged pullbacks we talked about in last night's video. But now markets are sideways, choppy, and range-bound. You know, some folks might not like these choppy sideways markets, but not on this YouTube channel. We love range-bound markets here in this office because ranges are so easy to trade, right? You trade the rotation back and forth. So lots of range reversals on my radar for tomorrow. I'm going to cover all the details in tonight's video. By the time we're done tonight, you'll have an easy roadmap to make some money on range reversals tomorrow morning as well. Before we jump in, though, into my favorite trades for what might be a very good Wednesday tomorrow morning in our trade room, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, hit that like button for me tonight. Give me a shout out. Give me a hell yeah down in the comment section below. All kidding aside, though, thank you so much for tuning in, supporting the channel. Fantastic job today. Been a great week so far. Let's keep the good times going for tomorrow. Boy, charts are all ready to go here tonight. NASDAQ and triple Qs are ready. Oh, the E-mini and the SPY is ready. I have three, I think, pretty obvious clues right now on these charts that are telling us where the winning trades are going to be for tomorrow. One of those three important clues is right here on my 60-minute time frame. We have bear markets right now on the S&P and SPY, and of course bear markets right now on the NASDAQ and the triple Qs. The 60-minute time frame is excellent to give us the overall directional bias. It helps us time the best entries for the following morning, but we don't trade off a 60-minute time frame. I don't trade off time charts. I trade off tick charts, and I have two more important clues on those tick charts that will help us time the best range reversal entries for tomorrow. Before we do that, though, before we jump into the tick charts and talk entry tactics, let's check our schedule for tomorrow because tomorrow's an important day. Tomorrow's Wednesday. There are three things I want you to be aware of for tomorrow and one extra bonus thing. First of all, tomorrow, we kind of officially kick off earnings season. 2 weeks after the end of the first quarter, which of course is middle of the month of April, we start getting big corporate earnings tomorrow morning. Before the open, we have ASML, a big semiconductor company, reporting tomorrow morning. We got more additional big earnings coming out on Thursday before the open and after the close. But for tomorrow, though, be aware, before the opening bell tomorrow, we may get a jolt of volatility after the ASML earnings come out. Everyone is watching to see who competes with NVIDIA right now for semiconductor chips for the AI race right now. That's definitely one thing on my radar tomorrow. Later on in the session tomorrow afternoon, we get the beige book. The beige book, of course, is kind of the notes from previous Fed meetings. Everyone wants to know when the Fed is going to cut rates, if they're going to cut rates at all this year. We have to make sure we pay attention to the beige book tomorrow. And of course, the third thing on my radar for tomorrow, I'm sure most of us know this already, but everyone's waiting right now to see when Israel will respond to the recent retaliation from Iran. We heard this afternoon that Israel has decided to respond with force. We just don't know when that's going to come right now. That's a very big known unknown. That's the third thing on my radar for tomorrow. So we got earnings in the pre-market tomorrow, beige book at 2 p.m. Eastern time, early afternoon. And again, everyone's kind of waiting to see what will happen in the situation in the Middle East right now between Israel and Iran. One more thing you want to keep in mind for tomorrow night is tonight is the final newsletter of the week this week. I will not be back with the newsletter tomorrow night or Thursday night. I know, I apologize. Don't you worry, though. I'll be there with you guys this week in the morning trade. We'll see you guys tomorrow morning at 8 o'clock Eastern time. But unfortunately, I'll be out of the office in the afternoons the rest of the week. We'll come back and resume next week, so I'll miss you guys the rest of the week. But you know where to reach me, right? I'll always be in the SOT trade room at 8 o'clock Eastern time. So no video newsletter tomorrow night or Thursday night. I know, I hate to leave you guys hanging, but every once in a while they do let me out of the cage here at SOT headquarters. Back to our charts, though, because the money is made on the charts, right? We don't trade the news. We trade off of charts. Let's now go my favorite trades here for tomorrow. We'll start first here on the S&P and SPY. We'll finish up tonight on the NASDAQ triple Qs. Remember, the NASDAQ and the S&P are very similar, so they're very much interchangeable. We talked about earlier how I have three important clues right now. One of those clues is this bearish overall direction right now on the 60-minute chart, but we don't trade off the 60-minute time frame. I trade off tick charts because tick charts, well, they make pattern recognition. Trading is a visual game. It's all about pattern recognition, and tick charts make everything easier with pattern recognition. You'll see up top here, that is a 7,000 tick chart linked up top there. And if you're watching for the first time right now, welcome aboard. This is the 21 EMA. It's pretty much the only indicator we use to find lots of winning trades each week in our trade room at 8 o'clock Eastern time. There are two more, I think, just as important clues here on the tick chart. One of them is this big trading range. Now, like I mentioned earlier, some folks might look at this and be upset, right? I look at this and I'm like, hell yeah, this looks great. We love range bound marks. Why? Because ranges act like magnets, and we know that ranges love to rotate. They rotate up, down, up, down, up, down. And so you can imagine, right? We can buy low, we can sell high. That's why I said earlier, we love ranges because the strategy is so easy. That's one big clue. Trade that rotation. Now, we got one more big clue, and speaking of big clue, it is a big clue. It's that big move down that we saw basically yesterday afternoon as the situation escalated in the Middle East yesterday afternoon. Now, why is a big move important? Well, because think about it, right? We have to assume that sellers are probably not going to want to sell low right now, right? Sellers want to sell high. So we assume after a big move down like this, we got to get price up to attract in more bears because sellers want to sell high to short back down again. I would also imagine, too, that if we end up going lower, now assuming nothing escalates in the Middle East overnight, there probably aren't going to be a lot of bears down here either. I think it's a great spot here to buy nice and low because nobody wants to sell low like that after a big move down. So let's put these two clues together, right? We have a range that tells us we can buy low, sell high, trade that rotation, get a big move down, which means I love the idea of some bull traps off the high, bull traps, allowing bears to sell high. And I'll tell you, in these overextended situations, again, pending any new escalation in the Middle East right now, I love the idea of some bear traps down below the low. So in this situation, the key really is trading reversals, right? Trading range reversals back and forth. And the way in which we trade reversals is with traps, right? Those are bull traps off the high and they are bear traps off the low. Now, really, really important. We're bearish overall. So how we apply a bull trap off the high will be different than how we apply a bear trap off the low. All right, we'll talk about that as we go deeper into this video. This will be a masterclass for you tonight on range rotation and trading course range reversals. So we'll talk about as we go higher here, kind of the easier money, I think, right now is the bull trap of the high. But first, though, let's talk about really one of my favorite trades here for tomorrow is a bear trap off of that low. And here's the trick. The trick is you want to find levels of support underneath the trading range, like this triangle, for example, right? That's one level of support. I have a pendulum swing off the high. We talk about pendulum swings a lot in the free video course, right? And also, to be aware of a measured move. Now, we talk a lot about measured moves in our free video classes, right? If we see a breakout of a trading range, okay, the size of that breakout leg, okay, the size of the breakout leg becomes the measuring leg. I don't have a crystal ball. I can't tell you how big that first breakout leg will be, but that's a third level of support I'm looking for underneath this trading range. Now, I mentioned earlier, we have to apply reversals a bit differently off the low than we do above the high. I'll talk about the easier one a bit later on in the video. First, though, for example, if we go lower right now, we're a bear market overall, right? I've got to be a little more selective to buy off this low. Also, too, for all I know, we're going to keep on going lower, so I can't pick the bottom, right? We're not going to be bottom pickers on this. That's like a rookie mistake, right? Here's what you want to look for. You want to look for what I call a crown reversal, but in the free video classes, they're called bear traps, right? It's bears try once, it's a higher high, and bears try twice. Okay, I call these crown reversals because they look kind of like a crown to me. It's a higher high in price and a trap right below that low. It's a bear trap pattern, all right? Now, again, I'm going to apply this off that trend line, off that pendulum, off that measured move I talked about there a moment or two ago, all right? That is a bear trap coming off of that low. It'll be a bit different above the high. We'll talk about that here in a moment. Now, Couple of variations of this. There's two main variations of this bear trap you want to be aware of. First of all, sometimes there are so many buyers down there, it'll pop right back up and begin to grind going higher. Okay, the way you use a bear trap on this one is you draw a trend line off the high, you mark the channel off the low, and watch closely. I'm going to look left, find those swings, and that's where that bear trap comes in handy. See, it's similar, right? It's the same basic idea. It's the same thing as bears trying once, higher high, bears try twice. We have the higher high, we're underneath that low. It's just a slight variation to it, right? So just be aware of that pattern or that pattern off of that low. And I'll tell you, sometimes if we're lucky, we'll get two bites at the apple. We'll get that strong run down. We'll get the bears coming in, get them trapped in. We'll get that long trade going up. But oftentimes what happens is they'll hold the underbelly of the range, because ranges do like breakout pullbacks, and they'll run back down and do it again. If that happens, this is not a breakout yet. They have to go a little bit further than that for a breakout. The most important thing to know now is think about this. Anybody who sold short right here, where do you think their profit target is? At that low. So is it safe to say anybody who sold up here is now a buyer down here? Absolutely. One of my first mentors would always say, these are scenarios where everyone becomes a buyer. Why? Because anyone who sold short up here takes their profit down here. They become a buyer. And then once we get those bears once, bears twice, we're going to use their stop losses, right? Their stops to fuel that move going higher. That's why bear traps are so valuable with trading these range reversals. So don't be afraid to grab that bear trap of the low. Again, I always take some profit off at the underbelly of that range. Don't be surprised though if they run this back to do it again, and then it's one more time, right? That bear trap going higher. And don't forget, if this thing starts going higher here, keep looking for those same types of bear trap patterns on the way back higher. Bear traps are the name of the game. Buying underneath a bear range like this could be crown reversals like these, or kind of a classical bear trap pattern, that higher high in price and that move right below that low. Now, let's slow down for a second, because I know most of you guys know traps, right? I get a bunch of emails every day, making money with these. We teach these, of course, in our free video classes. So I know most of you guys know this already. But if you're here for the first time, if you're watching for the first time right now, this might be a brand new language. This could be way over your head. What are traps? What are range rotations? Don't you worry. I teach all these entry patterns in a lot more detail. I have hundreds of examples of range reversals, double bottoms, bear traps, and everything between. I'm gonna put a link up top here for you, upper right hand corner. I'll hook you up. Grab a little link that popped up there, and take that free trading course, because the strategy I teach in that short video series will teach you, first of all, a simple trick we use to know where the best winning trades are going to be each day, like during ranges and range rotations. But more importantly, though, I want to teach you how to enter properly. I'll teach you 4 my favorite entry patterns. You'll learn traps, failures, and a whole lot more. Guys, that free video course is perfect for anyone trying to make the jump into full-time trading. Give you an easy roadmap so you know where the winning trades are going to be each day. Also, too, I'll put all the important links tonight in the description of the YouTube video. Put the free class links down there. We trade together every morning, 8 o'clock Eastern time. I'll put trade room information down there. And also, too, I put a lot of updates on Twitter or X during the day. If you're on Twitter or X, give me a follow. All the details are down there in the description. But make sure you grab that free trading course, because that will give you a lot more details. I can't teach everything, of course, here on these short YouTube videos, right? So as we go lower, right, it's that bear trap pattern and those variations I mentioned a few moments ago. Now let's talk about if we do end up rolling higher. The key going higher is, remember, it's a big move down. Let's go to the NASDAQ now, right? NASDAQ's getting a bit lonely over there. I can tell it's getting lonely here, Nasty. I'm with you, buddy. Here we go. On the NASDAQ right now, on the 60-minute time frame, we know already we're bear market right now on the 60. That's going to give us the best overall directional bias. It helps me filter my entries or structure my entries to make the most amount of money and avoid losses each day. Let's look at the tick charts now. Because trading is about pattern recognition, tick charts are an easy way to make trading a lot easier. So you notice up top here, a 4,000 tick chart up top there, and again, the 21 EMA. Same basic clues right now on this NASDAQ. We have a beautiful trading range right there. Again, I call it beautiful. I think these are great markets, but some folks might disagree with me because they haven't learned how to trade ranges. Ranges are magnets. They love to rotate, right? Back and forth here, right? Back and forth. Also, too, we get that big move down, that big move down. What does a big move down tell us? A big move down tells us that you have to think that bears are waiting up here to whack that sucker right back down again. Everybody wants to sell high. Nobody wants to sell low. And again, assuming no new information comes out of Israel or Iran overnight, as we go down here, you have to think there will not be a lot of bears down there, right? Only rookie bears, right? Professionals are not going to make their money chasing markets lower. This is a great spot there for some bear traps, as you mentioned earlier here in the video. But now let's talk about as we go higher. Let's talk about go higher here, because this will be similar to the game plan going lower. But again, like I said earlier, right, we need to apply range reversals a bit differently depending on the overall directional bias. For example, as we go higher here, I don't need to be as specific as I was buying off that low. For example, I would love to get a pop up. I would love to get some buyers chasing after it. And this is where you start looking for what I call a failure into trap combination. A failure into trap combination. It looks like this. It's a failure pattern, right? In the free video course, we talk about buyers try once, buyers try twice, and once those buyers are trapped in, we can then use their stops, right, to fuel that move going back down again. Remember, we don't have a crystal ball. At least I don't, right? I don't know how high this will be. It could be here. I don't know, right? I don't know. I don't have a crystal ball. So rather than trying to pick the top on that, I would rather wait for it to pop up. And then once it begins to pull back to that 21 EMA, now go, okay, I know this is a horrible spot to be a buyer, right? I do not want to buy up here, right? I'm buying in a big bear move down, right in the resistance. Horrible spot to be a buyer. So we assume the only people buying up here are rookies. They're inexperienced traders, small stops, small accounts, right? Easy to run over ultimately in the big picture. Now, again, I need to roll this thing back over. This will be a lot of what? A lot of bullish momentum at that point. Let's not pick that top. Let's go one try for the buyers, two try for the buyers. I want to see two separate tries here. Make it obvious. One and two. And I have a lot of examples of these, of course, in that free video class I mentioned earlier. Now, sell right into those stop losses. Now, I mentioned earlier a failure. This is called failure patterns. A failure into trap pattern. A failure pattern into as we go lower. Now, as I go lower, I want to sell as high as I can right now. I want to sell low. So to do that, we're going to find those, in this case, a bull trap pattern, right? A bull trap pattern is very simple. It's a lower low in price and a trap of that high. Remember back down here, it was a higher high in price and a trap below that low. That was a bear trap, right? Below that low, higher high in price, trap below low, right? That's a bear trap. This is a bull trap pattern off the high there, all right? So again, I call these failure, right? Failure. It's called a two-try failure. We don't need a bull trap up there. It's kind of a variation of a bull trap. Now, don't get me wrong. If we see price go up once, right? Go up once, they pull back. Buyers try once to go higher, go lower low. Buyers try second time to go higher. If I get one of these, this is even better. This is officially now a technical bull trap pattern. Buyers once, buyers twice. It's a lower low in price and a trap above that high. I just want you to know, though, you don't need that trap, okay? Because we're so bearish overall, all I really need is I need to go up. Don't pick the top. 1, 2, right? And sell into those stop losses. Then as we go lower, I do need that trap pattern, right? That's kind of the bare minimum. If we get a bull trap up top there, that'd be even better, right? It's a failure into a bull trap combination. Now, just be aware of this, right? Sometimes, and oftentimes, there are variations of this, all right? I wish I could give us the prettiest, perfect price action every single time, but the marks are ugly sometimes. For example, sometimes we get up and we get whacked right back down again. And they go like this, right? They grind back down like that. See, here's the problem. I don't want to sell down here. right? I don't want to sell right there, right? That's not going to give me a very good risk to reward ratio, right? So what I do in that situation is, if we see kind of like that V top scenario where it whacks back down again, what I'll do is, as it grinds down, I'm going to draw a trend line off that low, up around that high. See where I'm going here now? Now think about, look left, find that swing high, and that is another example of a bull trap, right? A bull trap pattern. It's a lower low in price, and I move right above that prior high. Now, in all reality, on a faster time frame, because we don't trade a 4,000 tick chart, on a faster time frame tomorrow in our trade room, this could be a bull trap pattern. It could be a buyer failure pattern into a pullback combination pattern. This will all make a lot more sense once you get through the free video classes. But this is the technique I like to use to make sure now that my risk and my reward is now balanced, right? If we pop up and get whacked right back down again. And as always, we might get 2 bites at this apple. We may run up. We may get those buyers coming in. We may get that 1, 2, trap those buyers in and that run back down. We may get our 1-to-1 first target, stop moves down to point of entry, get rid of the risk, and we may have it hold the top of that range. We may get a run back up again. This is not a reversal, right? This is not a reversal, right? It takes a lot more than a double top to be a reversal after that big move down we saw yesterday afternoon. But think about this again. Now think about this again, right? Whoever buys that pullback, very, very, very aggressive trade, by the way, I might add, right? Very aggressive trade here. Not my favorite trade. Whoever buys that pullback, though, where would you take your profit? You take your profit up here, right? So buyers, right, who are buying the dip, right, they become sellers now up around the high. Now think about who in their right mind would go up and buy up here. Don't say you. Please do not say you, right? This is a horrible spot to be a buyer. It's an overall bear market. You're buying into that high up here. We don't make money buying high. We make money buying low. Right? I know it's counterintuitive. We're going to buy as we're going lower. We're going to sell as we're going higher. So now think about this. These are rookies. These are rookie traders, right? They don't watch my videos. They haven't quite learned this process yet. Trap them in once again and use that same failure into that bull trap pattern. Excuse me. It's a bull trap, right? Pattern here. Use that bull trap pattern going back down into that trading range. Make sense? So we may pop up. We may get that nice, easy short back down again, take some profit, and it may run right back up. Unfortunately, stop me out of my point of entry. But don't forget, this is not a reversal. Oftentimes, these are the most lucrative trades because sometimes it pops up so strong, they want to retest the high and then back down we go. All right? That double top reversal. And again, one very common scenario here is we run up, we get the buyers once, buyers twice, right? It shoots back lower, and when it does that, it begins to grind going lower, right? That grinder is the giveaway. We call these pop and grinds. We talked a lot about this last night on the video. Mark that trend line, mark off that high, and then go looking left, right? Find those prior swings, and usually that's where the best money is made. It's that first test, right? The first test of the high of that channel. We always say first test is the best test, right? First test off the top of that channel. And again, it could be a bull trap with this example. It could be a buyer failure above the 21 moving average. You'll learn more about those, of course, inside of the video classes. All right, guys? So now you know more, though, about how we trade range reversals. The bear market, I could be a bit more aggressive off the high, more selective off the low, and don't forget, right? Don't chase this thing back and forth. Trade those edges and trade the rotation for tomorrow. Hope you learned a bunch here tonight on the video. Now, that's the plan for tomorrow. Now, don't forget, though, tomorrow morning, 8 o'clock Eastern time, the easiest way I know to start making consistent money in any market you want to trade is come out and learn this stuff and trade with us every morning in our trade room. I'll put all the important links tonight, all the free class links, the trade room membership links, Twitter feed stuff. I'll put all the details in the description of the YouTube video. I would definitely recommend start first with the free classes, learn the basic strategy, start taking trades on your own. And something tells me I'll see you sometime soon trading with us in the morning trade room at 8 o'clock Eastern time. Any questions, any issues getting started, don't be afraid to call the office or use live chat. I'm always here to help out every step of the process. Guys, hope you learned a bunch here tonight in the video. Hope you use this knowledge to earn a bunch tomorrow. I will miss you the rest of the week, but you know me. I'll see you tomorrow morning, though. Don't worry, in the members trade room at 8 o'clock Eastern time. In the meantime, be well. Be nice to each other out out there tomorrow, and you better be here next time. Adios, amigos. Bye for now.